Okay, excuse me. We witnessed another technical issue today for the second time. I don't know. It's been crazy. Okay, I was talking about gold. Gold has become so crazy. It's one of the assets that reacts so harshly to the news because many aggressive traders trade gold and doesn't matter if anything happens, you can see its effects on gold. And due to the chaotic uh, incidents and situation happening in the Middle East, gold was in a very fluctuative phase that made the price uh, go up uh, sharply, and then uh, it made the price fall sharply, and it has confused the traders. And the people who were long had to take out their loans with profit or with losses, and then again the bulls are buying at the bottom. So let's talk about gold in the perspective of technical analysis. See, this is bull, and as you see, it's in a bull channel. But it is not the only level that you can draw. You can see other points to draw your trend line, and you can see as I told you, how the price reacts to your level. No line is exact until the price reaches to it and reacts to it. Okay? But what if you consider this low as a major low, which it is? Say the price had a pullback to EMA and then went up sharply. Uh, Look at the price action here. The price is in a trading range, and then it breaks from the top, leg up, pull back, second leg up. So this low and this low are very important lows for the bulls. And since it is the final major low of the bulls, if you consider this low a major low, you can consider this low as a major low as well. So we put the line below this low, and the first point, let me delete this one. So it's the beginning of the channel. You can see the trading range and then the break from the top. So it is the beginning of the channel, and it is the final point that I mentioned. And see how the market reacted to this. When the market is falling, it is falling to find a support, to halt, to wait. Do you understand what I mean? Uh, and we don't know which support area will succeed to stop the price. So we need to consider all the possible support areas for the uh, asset, for the price, to see where it's gonna stop at. You can consider this level as a support level as well, and you can see that although the price passed this level, but it gotta bounce up. Okay, so you can consider this level as a very strong level, and you can see a tiny level here as well. Compared to this level is twice as small as the uh, level above it. And you can see that the price couldn't pass this tiny level. See, let me delete this one. See, it didn't pass this one. And also we have another support level here, that this level is supporting this level. But bears couldn't take the price lower than uh, the level that I showed you, which is this level. And at the same time, you have your channel line, your trend line drawn here. So see, if I put my line below this low, nothing. If you are a day trader, you can find any of these moves an opportunity to take a trade to make money. If you're a investor, okay, you can wait for the price to reach this level, or if you are a swing trader, if you let your positions open during night, you can wait for the price to reach this level if you want to buy. And if you want to sell, you could sell here, here, or even here. But your risk is too much. The stop is above here because bulls are trying to uh, scalp and take small profits on the 4-hour chart as well. So we understood that the bears stopped because of the levels that I have shown you on the chart. But let's talk about gold on lower time frames to see if the bulls could take any positions or not. Okay. It's yesterday. You can see the drop, a very sharp drop. And look at the doji after the drop. Bad follow through bar. And bulls got more confident to buy. They bought and took the price higher. But you can see another leg down. So first leg down, pull back, second leg down. And you can consider this one a huge trading range because of the size of the pullback. It's not a small pullback. It's a big pullback, so it's big down and big up. So the bears are not confident to stick to their plans and to hold their positions, and they take out their profit at new lows. See, it's the price came closer to the previous low, and the bulls started to buy, and bears took out their profit for a couple of hours, and then they started to sell again. And look at this tail. These are the bears who take out their profit, and the bulls who started to buy as well. And look at this low. And the bulls are going to buy at this low as well. And the bears are going to take out their profits at this low. Why? Because of the price action. Unless a big bar closes below this level, it didn't happen here. See, guys, it didn't happen here. So it is the major low. It happened here, but look at the follow through bar. Something like this must occur here at this level, and the next bar must be strong as well. And it shows the confidence for the uh, bears to sell. Let me give you an example. On the 15-minute chart, look at the breakout. Very strong breakout. Very, very strong breakout. Look at the next bar. Stronger than the first one. And look at the sizes. And then bears continue to sell. So look at the bars, strong enough to make the bulls stop buying. And everyone was selling here. And when the bulls started to buy, look at the bar, very strong. Look at the next bar, stronger than the first one. So bears couldn't take the price lower because they were not confident. A big bar is not enough. The next bar after the big bar, which is called a follow-through bar, is very special and important as well. And you can just see this pattern, this price action, in many cases. For example, for EURUSD, do you remember that I told you the bulls were very strong? Let me go to the, yeah, it's better. See? It's an example on the 4-hour chart. So the price action is happening on every time frame. It doesn't matter. Look at the bar, very strong. It broke the top of the trading range strongly and closed above its midpoint. Look at the next bar, very powerful. And look at the next bar. So the people who took the price higher were confident that the bulls are buying. So bulls must be confident that the other bulls are buying as well. And that's the same scenario for the bears. Do you understand what I mean? And that is happening for bears. Look at this bar. Look at this level. Very strong and sharp drop. Look at the next bar. Bear, but tail below. It means that the bears are not that confident. They're taking out their profit. And the bulls are buying as well. Look at this break. Very strong bear, but tail below. Next candle, the follow through candle, is bull. Again, a very strong bear candle. Look at the next bar, doji. They're not confident. Very strong candle, but look at the next bar, bull. A very strong bull. After the strong bull, another strong bull, another bull, another bull. So the bears are not selling. See, lack of bear bodies, bear strong trend bars. And bulls are buying whenever they see the bears are not confident to sell. Okay, then that's it for today. It's 5:12 Dubai time, so the New York session opened. I had a position as well, and I guess, yeah, it touched my TP. I sold below this low because I saw a tendency for the bears to take the price lower, and the look at the trend bar. Okay, so it is the uh, spike phase. The I call it breakout phase, and then channel, and then trading range. So the bears could take the price lower very strongly. Look at the next bar, bull. Next bar, bear, but bull. Bear. Next one is gonna be bull or bear. We don't know. And it shows that they're fighting, and ultimately one of them wins, one of them covers, and the only thing you have to do is just being on the right side. And if you're not on the right side, everyone makes mistakes. You shouldn't oversize. So uh, it's only a trade. You lose, but there will be opportunities to take profitable trades in the future. So do not look at that position as the position that you only have, the only opportunity that you have. That if you do not take it, you're not gonna make money. You're gonna just face a very bad situation in your life. No, it is not like that. Everyone has an opportunity to take trades if they have money to open the position. So you shouldn't lose your money. You have to protect your money. The first rule is to protect your money and then make some money. Your first job is not making money in this business. Your first job is to take care of your money. And as long as your position is reasonable, you can take it. Set a stop loss in the market, not in your head, because when the price reaches your stop loss that you set in your mind, you can change your mind. Okay, put the stop loss in the market and let it hit. Nothing happens. You will have an opportunity to take profitable trades in the future. And set some good rules and stick to the rules, and make sure that you're not doing anything against your money management system, your risk management system, and you will be successful ultimately. Thank you for your attention. Uh, Again, thank you for watching us. Please let us know what other assets you want me to talk about, and I will do my best in order to have an analysis on that asset as well. And that's it. Stay safe and goodbye.